hello to Marcus Carlson. Marcus, there's a lot of socialist backbenchers unhappy with the prime minister.
Yes, this, as Manuel Valls has come out with a fresh batch of spending cuts. The French government is trying to get to grips with its budget deficit, and the Prime Minister announced earlier a plan to cut 21 billion euros from pensions, social care and also healthcare. It's part of an effort to cut the deficit by 50 billion euros by 2017. Kyle Brown has more details.
France's new Prime Minister Manuel Valls lost little time, announcing a host of reforms moments after emerging from a crucial cabinet meeting. The aim? To show that major reforms are now on track.
We have to restore the fabric of our economy and regain the ability to better compete, develop the country's economic activity and hire workers again. That's not to say that we will call into question our social model, our social rules or the minimum wage.
Valls reiterated the socialist government's pledge to cut public spending by 50 billion euros between 2015 and 2017. To make savings, the government will cut staffing outside of education and justice and security and freeze some social benefits until October 2015. The lowest pensions and welfare payments will escape the measure. A civil servant pay freeze already in place will remain until next year. The cuts are aimed at allowing France to bring in its budget deficit to within 3% of its GDP, to comply with its obligations to the European Union. Although the Prime Minister made a fresh pledge to honor France's commitment, there are warnings that more measures are necessary.
And we're heading across the English Channel next. For the first time in 5 years, unemployment in the UK has dropped below 7%. Official figures show there were 2.25 million job seekers between January and March in Britain. That's 6.9% of the labour force. The British government says it's a sign that the recovery has taken hold. Economists say that the improved jobless picture could give the Bank of England space to raise interest rates from the current record lows of 0.5%. Now, global stock markets have been getting a boost after China's latest growth figures. The world's second biggest economy grew by 7.4% between January and March. That's in comparison to the same time last year. The Chinese government is aiming for a 7.5% growth rate for the year as a whole, and the figure is below that. Now, it's also the weakest reading since 2012, following a gradual slowdown in recent quarters. Still, though, economists had been expecting a slightly weaker reading, and a 7.4% growth rate is seen as a sign that the economy is holding up fairly well.
The actual GDP are below the target, because the differences is not that big. There's still a buffer for the China government to reach their objectives, and then therefore there will be no harm in the first quarter.
OK, let's take a look at the stock markets. On the back of that, in Europe, those China figures helped markets trend above the flat line. Investors there watching events in Ukraine, but they were seen to be put to one side during Wednesday's session. Burberry shares, they ended higher after better than expected revenues from the luxury goods maker. In the United States this hour, we're also seeing green arrows basically across the board. The Nasdaq in particular is bouncing back after we've seen weakness in technology stocks in the past week. Better than expected earnings from Yahoo is also part of the reason why we're seeing the Nasdaq powering ahead. Let's talk you through a few other corporate stories that we're watching for you. Legal costs pushed Bank of America into a $276 million loss in the first quarter. The banking giant was dragged down by legal expenses to the tune of $6 billion. That includes a payment to the US government to settle allegations the bank missold mortgage-backed securities before the financial crisis. Shares in Bank of America are trading down this session. Shares in British retailer Tesco got a boost in London, ending 2.5% higher. It came as the retailer pledged to cut prices to win back shoppers and turn around its fortunes. Tesco's chief executive says he wants to take on discount retailers like Aldi and Lidl. The turnaround plan was unveiled as Tesco reported a 6% drop in annual profits, partly due to slower trading in Europe. And the Bitcoin exchange Mt. Gox appears to be heading for liquidation. A court in Japan has rejected the company's plan to resuscitate its business. Mt. Gox filed for bankruptcy protection in February. At the same time, it said it had lost 850,000 bitcoins worth around $500 million, and Mt. Gox blamed possible theft. Mt. Gox later found some of the bitcoins, but most are still missing. Okay, and with that, Mister, we're going to end business rather, and I'm going to throw it back to you, Francois.
I'll be careful to see if you're wearing a new watch tomorrow there, Marcus Carlson.
It wasn't me.
Many thanks, Marcus Carlson. We'll be back with more business news later on. Time now for sports, and we're joined by Dan Levy.